As the crypto crash deepens, it looks like we're getting another opportunity to get set in our positions if we don't already have them set up. So dust off your trading plans and get prepared for the next stage of the bull market. Now, it might sound like I've been talking about that forever, but that's because I'm looking at it in terms of a macro picture. And that's why I'm still seeing it as a bull market moving forward, even though we get the odd day here and there of 5 or 10% drops in the blue chip cryptos. So we're going to look at where the bottom could come in using our trusty 50% level, which has called many beautiful lows and buying opportunities within the bull market, and also look at the most feared crypto trading strategy out there. And that, of course, is leverage trading. What it takes to play a conservative hand at leverage trading, especially when the market is down. So make sure you smash the likes and the subscribes. Follow the journey here on the channel on the way to 250,000 subscribers. Thank you for all of your comments down below as well. The comments about people finding their way in investing. It means a lot. It's really, really cool to see that. So drop them down below. I do read those comments down there, although I don't get to all of them. Enough of me rambling. Let's have a look at these charts. First up, macro view. At the moment, Bitcoin, you can see the trend. Trend is up. We can see that the market is looking slightly uncertain if we take it to a Binance chart, and of course Coinbase as well, where a lot of the volume is. So we can see the volume is starting to come back to the market, but higher highs and lower lows. That's a sign of uncertainty at the moment. But let's take our 50% level, which is called many times before. Let's look at what we saw during the first leg up. Look at this here, $41,000. Bitcoin spiked to 39,600, and then we got so many closes above it and a lot of support. So if you can't see that right there, zooming well and truly in, 50% level. Now I'm only showing you one here, but this happens time and time again, and this tool was invented by W.D. Gann. So it's basically just a calculator dividing the range, so the low and the high, in half. And for some crazy reason in the market, we always come back to a middle point, and in this case we use the 50% level. It's like a pendulum swinging, coming back to the center. So we've swung too far to the upside, now we're coming back to the center, 50%. So what does that mean for us now? Let's move this up, put it to that low, grab the top, bring it to the next high, and the 50% level comes out at around 54,400, which surprisingly enough, which is not surprising anymore when you use it so much, you can see that we've got a lot of lows come in on the way up that we're hitting it around that 53 to 54,000. So should we get a base forming at that level, that's a nice early sign for buying opportunities on the way up again. Now, of course, I can't give you financial advice because I don't know what position you're in or what type of investor or trader you are, how freaked out you get, how much paper you have in your hands. But at the end of the day, that's the way I use the tools. So that also lines up nicely with our top that came in just short of 53,000. So if we did get a spike down to 52 or 53 and start to crawl back above, just like we saw on the 21st of September, these are all positive signs which show macro strength moving forward. But in the short term, it just needs that time to rest, come back, wipe out some of the bullishness, especially like you remember just 2 weeks ago, we should have been going to $70,000, $80,000, $100,000 Bitcoin by the end of November. This sort of stuff is nonsense. Like there's no strict saying that it has to do anything by any certain date. All we're doing here is just watching what the market's doing, watching what the patterns are, and then that gives us a leg up of how to react next. Taking a look at some on-chain data and how the market is reacting, well, we're seeing the market still climb up. So the orange line is the long-term holders and the black line is the price. So as the price gets to its highs, you can see the long-term holders aren't really holding too much anymore. As the price gets down to the lows, you can see them start to pick up again. And it happens time and time again. 2019, we had a peak into June, July, and they were basically dropping their bags. And then eventually, as it was getting to some lows again in that $6,000 and $7,000 Bitcoin, they're starting to buy up again, and then continued to buy all the way up to around $10,000 before they started to drop their bags at $20,000 to $60,000. Happened in 2017, happened again in 2013. You can see this isn't exact, but it does give you an idea that holders are still holding on at this point in time. Now, let's have a look at the liquidations as well. And you can see we had the liquidations back from September, again in September at that very big low on that 50%, which we just looked at. October, November, and November. So why is this important? Why are we looking at this? Well, on my chart here, the little pink arrows are the liquidations. And I like to see this because when the market gets too overheated, it's really nice to have that bushfire and just take out all of the extreme positivity and bring us back to a middle pendulum swinging point. Like we just saw, this was dead on the 50% at $41,000. And then we can regrow, we can start afresh, and then come back to that springtime and summertime where we take off to new highs. But you want to be getting in when the fire's on, when it's winter, when everyone's scared and worried. And I think that time is pretty much now, and obviously for the next potentially a few days and few weeks. So I don't think this will bounce back to $70,000, $80,000, $90,000 in November, but I don't need to be tied to that position either. I don't need to be tied to thinking that we're going to get a $98,000 Bitcoin by November 30th, because I'm flexible in my approach. And being flexible also helps with the leverage trading positions. If you're not flexible, you get absolutely wiped out. And if you're too greedy, you get absolutely wiped out. Speaking of leverage, of course, we've got the links in the description down below. Now, I bring this up because, of course, there's the bonus there of $7,100. But more importantly, I want to talk about not getting too greedy in these positions. So if you're thinking about getting set in some positions on the way up, people want to take that leverage to make more than what they have. Don't get greedy. Look for some areas where the market has shown signs of support. And if it was to break down, then you could probably say, well, the low's not in yet, and we're probably going to see further declines. So I'm looking at this level of around that $40,000 and then the $30,000. So we had two major bases being supported there. Now, because the market is down and we're seeing Bitcoin, as I record this, at 56,700, if you were to have a 2x leverage position, that could be all the way down beneath the previous lows. So your trade could be moving around at these levels and it wouldn't affect you. You'd see the price go down, but you wouldn't get wiped out like you see on the total liquidations here. So you're not one of those people that are trading at 10, 20, 100 times leverage. At 100 times leverage, the price only needs to move 1% down. And of course, you're 100 times, so you lose 100% of whatever you traded. So say you put $1,000 in here, you would lose a total of $1,000 if it went 50% down from this current spot. And that would give you a 2x leverage. So that's why I like these positions, especially if you're looking at a macro view of the market, which that's where I'm seeing this continue to play out at this point. That gives you a safer entry opportunity, and you can put your stops further away and also be able to be set for that next move up. Now, I've gone through a lot of price here to look at why this is still in a bull market. You can see my 50%, they haven't broken down yet. My major 50% level is still sitting at around $49,000. So between that 49 and 54 looks reasonably healthy at this point in time. Now let's look at some of the time issues. And you can see the little white and purple dots here. The purple is the new moon and the white is the full moon. You've probably seen this come up a few times before. People just love sort of bringing this up. But in terms of timing, it's something that I've used in my trading for over 10 years. And the main timing I like to use is time frames and dates. So how many days is it taking to go up? How many days down? You guys that have been following for some time know that we've seen 49 days up from the July low to the September high. You can see 49 right there on the chart. Guess what? From the 21st of September to the current top we just saw was 50 days. So it can be off a little bit. Nothing is exact, but isn't that crazy that we had the exact same time? Okay, slightly off, but almost the exact same time. We had 7 weeks up before we get a major correction within this cycle. So what do we see last time? Well, the top to the bottom, about 25, 24%. From the top to 24-ish% would take us to about the previous tops that came in. So it's a good support level back there at around that 50 to 54K. I said around 49, so 49 to 54. Now, if we don't go that far because people are starting to front run the market because they're more bullish than what they were during this period of September where there was a lot of fear. Evergrande was collapsing to take the world down. China was banning cryptocurrency payments. There was leveraged long liquidations coming on. There was the second bout of the Evergrande news. So that was all September. If you haven't been following the market for at least 2 months, that was supposed to crash the stock market. Guess what? Never happened. Okay. So if we get this front running of people getting even more bullish, you'll notice that we won't get the price drop as far. And so we'll start to get front running. Maybe they'll start to buy in at 53, 54, 55, maybe 56K. And then we'll start to see that turnaround. But of course, we're going to be following on the channel. So make sure you are subscribed bell notification turned on, and of course, like the video up as well. Last thing is the timing, the dates. The 19th to 22nd has been popping up so many times on major and minor turns, and we're about to fall into one of those now. Today's the 19th, tomorrow the weekend, 21st, and of course Monday 22nd. So give or take a day or two here, and then look at the full moons as well. These dates have been working amazingly well for the last 6 months, and prior to that, the previous 6 months was just a little bit later in the month, around that 23rd to 28th of the month, and now it's starting to shift towards that 18th to 22nd. And maybe we'll see that move towards the middle of the month in the next 6 months. But pay attention to these dates. It's really important to note, and it can give you a beautiful entry opportunity, especially if you're looking to do some sort of leverage trading. All of these pieces fitting into a puzzle to give you that leg up on the rest of the market is how you can make some really good money in these bull markets. So check out the links, Bybit, Femex down below, up to $7,100 of bonuses when you sign up using those links there. Check us out on Instagram and Twitter. Use the official links, and of course Patreon as well if you want to learn more about trading and investing for the long-term financial freedom. Thanks very much for your time today. I'll see you guys at the next video. Until then, have more fun to get more done.